Buying a home is the most significant purchase that you'll likely make in your lifetime. And that's because it doesn't only impact where you live and your financial stability, but it also impacts future risk if something does go wrong. So in today's video, we're actually going to be walking through the idea of buying a home versus renting a home. We're going to be taking a look at the cost to buy a home versus the same cost to rent a home. And we're going to be talking about when renting makes sense versus when buying makes sense. Did you know that homeownership is one of the largest sources of wealth in the United States? Nearly 65% of Americans choose to be a homeowner at any point in their life. And as it sits today, nearly 65.8% of Americans own a piece of real estate. And with that, those Americans who own real estate have a 40% greater net worth than those of renters. The average net worth of a homeowner is $225,000 versus $6,300 for those that are renters. And the reason there's such a large discrepancy between those that own versus those that rent, because nearly 65% of Americans' net worth is tied up in real estate. Now, something I want to be very, very clear on early in this video, I'm not pushing you to buy real estate. This isn't a video about the reasons that you should buy real estate at the moment. It's more of, hey, these are the facts of where things are at the moment. Now things can change, but historically speaking, home ownership has been one of the greatest sources of generational wealth for most families out there. But at the moment, with interest rates sitting near 23-year highs, along with mortgage demand and applications sitting at the lowest level that we've seen since the mid-1990s, right now might not be the best time to buy a home. So in today's video, we're going to dive into that in a little bit more detail and provide you with some facts so that you can make the best decision for yourself. Now, earlier in the video, I mentioned 65.8% of Americans currently own real estate here in the United States. Did you know that 70% of those people are over the age of 45? And at the moment, nearly 1/3 of renters are under the age of 35. When we're talking about housing affordability and who's getting impacted the most at the moment, it's those renters, and those renters that are in the younger demographic, those younger millennials and those that are currently in Gen Z. And that's primarily who this video is for, to help those people decide whether or not they should jump into real estate or continue renting and wait for a better time. At the moment, housing affordability is sitting at the worst levels that we've ever seen because of record home prices and mortgage rates moving to levels that we haven't seen since 2000. It's now nearly 52% more expensive to buy a home than it is to rent a home. So before we dive into the cost to buy versus rent, let's talk about housing affordability. What makes up housing affordability? It's really a three-legged stool. One leg of that stool is house prices. The second leg of that stool is wages, and the third leg of that stool is interest rates. So right now, with high home prices and high interest rates and wages growing, but not at the pace that we've seen over the last couple of years, that's the reason it's so expensive to buy a home. So you might be watching this saying, well, when is the best time to buy a home? Well, the best time to buy is when housing affordability is really, really high. And that's one of those things that's very difficult to determine when you're actually going through it. When you're in the middle of it, it doesn't seem like things are that affordable or it's such a good time to buy. You don't really notice it until you go back and you look in hindsight and see that, hey, yeah, at the start of the pandemic, we had a lot more supply on the market. We had interest rates trending down, still in that 40-year trend, and realizing that demographics play a huge part in the home buying process. And over the next 10 years or so, you have a lot of millennials and a lot of Gen Zs becoming prime buying age, which means that you have a lot of demand in the market. And because interest rates were so low, it pulled a lot of that demand forward. So a lot of people that bought in 2020, 2021 probably weren't quite ready to buy. They probably would have been buyers in 2022, 23, 24, but because rates were so low compared to rents in many markets out there, it made sense for buyers to go ahead and take advantage of it. And that's exactly what happened. But at the moment, the pendulum has swung in the other direction, and housing affordability now is at all-time lows. So the question we're asking is, should you rent or should you buy? Now, before we dive into that, I'd like to take a minute and ask a favor. If you find any value in my videos at all, do me a favor and hit that thumbs up. It helps the YouTube algorithm push it out to more people like you. And if you want to stay updated on loan programs, interest rates, and everything housing, do me a favor and hit that subscribe button. So I want to take a minute here and talk about the cost of buying a home. What goes into that cost? Because this is really one of the first steps to determine whether or not you're even a home buyer in this market. Because if you don't have the things that we're talking about today, then the easy answer is, well, I just go rent until I have those things. But if you have them, then we'll talk about when it actually makes sense. But the cost of buying a home really comes down to a couple of different things. At the moment, the median home price here in the United States is sitting somewhere around $400,000. And the very first thing you need to be able to purchase a house for most people out there, outside of a veteran, because VA allows 100% financing, is some sort of down payments. And down payments can range anywhere between 1% down and 100% down, which essentially means you're buying the home cash. So if you're buying a $400,000 home, you typically need somewhere between $4,000 and upwards of $40,000, which would be a 10% down payment in order to buy a home. Now, a lot of people out there believe that you need 20% down to buy a home so that you can avoid mortgage insurance. And 20% down really is the best option if you can do it because you avoid mortgage insurance, but it's not always the right answer, and it's not always the right answer for everyone. But with that said, putting 1% down isn't realistic for most people out there. Most people out there are going to have to put at least 3.5% down, which means that you'd be financing using an FHA loan. Now, conventional loans also have a 3% down option, but with that said, FHA is typically going to have the lower monthly payment, which is where most people are going to end up. So if you're buying that median home pricing and you're putting 3.5% down, you're going to need a minimum of $14,000 in order to purchase that home. And with interest rates today sitting somewhere between 7 and 8%, depending on the type of loan you have, depending on your credit score, you're looking at a mortgage payment at a 7% rate on an FHA loan, putting 3.5% down, somewhere around $2,613. Now that's before you consider any taxes, insurance, and or mortgage insurance on top of that loan, which are the additional costs that we need to talk about here. So when you're buying a home and you're putting less than 20% down, you're going to have mortgage insurance on that loan. In addition to that, you're going to have property taxes, and depending on where you're located in the country, your property taxes are going to range somewhere between 0.5% upwards of 2.5%. And on top of those two fees, you're also going to have homeowners insurance. And depending on where you're located in the nation, if you're in an area that's prone to natural disasters or fires or that sort of thing, your insurance cost is likely going to be higher than it is in other parts of the country. On top of that, because insurance companies are quitting lending in some states and doing different things, insurance costs across the board have been rising, which is something you have to take into account. And two of these three fees here aren't fixed. So your mortgage payment, considering you get a 30-year fixed, is a fixed payment. On top of that, your mortgage insurance is also a fixed payment, but your property taxes and your insurance are two costs that could change over time, and that's something you have to consider in addition to maintenance costs that you have on a home. So when you own real estate, it's your responsibility to paint it, to put a new roof on it, to replace the HVAC if it goes out, to buy a refrigerator, a stove. Any of that cost that comes up, any basic repairs, are yours as a homeowner. And while there's no set amount it's going to cost you, you should be thinking about that when you're buying a house. You shouldn't be buying a house and using every dollar you have towards the down payment, towards the closing costs, and not having anything left over just in case something does go wrong. Versus when you rent a house, there's essentially no cost. It's the landlord's responsibility to do all of the things that we just talked about. And with that, renting is really transparent when it comes to costs. You really just have your monthly rent on top of any utilities you have to pay, but outside of that, there's no worrying about property taxes, there's no worry about insurance, there's no worry about mortgage insurance or having that down payment. You really just have to have your monthly rent as well as any deposit that is required in order to put that lease under contract. At the moment, in most American cities out there, it's actually less expensive to rent than it is to buy, with the median rent for the United States currently sitting at $2,011 per month, which is quite a bit less than it would cost to own that median price home that I mentioned a moment ago. But one thing to consider here is that rents are not fixed. There's no such thing as a 30-year fixed rent. So each year, your rent is likely to increase. In fact, over the last 2 years, we've seen rents go up on average 9.29%, or $171. In fact, we've seen rents increase nearly 20% over the last 3 years. So as a renter, something you need to keep in mind is that each year, your rent is likely to increase. And you also have to factor in whether or not your landlord is going to keep their property. Are they going to sell their property? Are you going to have to move? Which for many people out there can add stress and anxiety to a complicated situation. So at the moment, my opinion is renting is probably the better option option for most people out there, unless you're somebody that currently owns a home and you plan on selling it and taking that equity in order to help you buy that next property, because that allows you some leverage, takes some of the pain out because you have some money that you're taking from one property and putting it into another property, so your cost is going to be less. But if you're someone trying to come up with your initial down payment, you don't have that ability to take it from somewhere else, then it can be difficult out there at the moment with housing affordability being so tough. Well, the very first thing I would say is if you're somebody that likes to move around a lot, you don't plan on being in one location for a very long period of time, then renting typically is the better option because it allows flexibility, allows you to just pick up and move with really little recourse outside of moving costs. Also, at the moment, if you have the ability to take those funds that you would be using to own a home versus rent, because it's going to cost you more to own, if you were able to take those funds and invest them somewhere and get a higher return, then in some cases, renting and get the higher return on the other side and waiting for a better opportunity could make sense. And another thing I would say when it comes to renting versus owning, if you're someone that's early in your career, you haven't really found, where you're going to end up as far as career path, where you're going to get married and have kids, if that's going to be your final spot or not, if you plan on maybe moving to another location in the future, then renting is probably the better option just because it allows that flexibility. But on the flip side, if you're someone that has that foundation in your career, you know where you're going to be, you plan on being in a location for an extended period of time, I would say more than 5 years, upwards of 10 years, then home ownership is probably the better option. And one of the main reasons it makes so much sense is because you're fixing your housing costs. The earlier in your life you can fix your housing costs, the better off you'll be, especially if you're in a place where you're going to end up making more money. If you're in a career path where you're making substantially less money now than you will be in, say, 5 or 10 years, the earlier you buy a home and fix that cost, the lower overall portion it'll end up being of your budget. And on top of that, as rates come down in the future, you're able to refinance, take advantage of that, and even lower that cost even further. And some other things about home ownership that we don't talk about often is it really builds a foundation, especially if you have kids. Children of homeowners tend to receive higher test scores in math and reading on top of having lower dropout rates. And this stability provided by homeownership can lead to a better home environment, more effective parenting, as well as a higher participation in social activities. And homeownership can actually go beyond that increased security and stability by giving you a sense of personal achievement. By having accomplished such a large goal, it can lead to higher self-esteem as well as a boost in self-confidence. But let's be honest, most people don't care about the emotional side, they care more about the logical side. And as we mentioned earlier, homeowners on average have a net worth of $225,000 versus renters having a net worth average of around $6,300. And did you know that burial costs here in the United States averages about $8,000? So the average US homeowner actually dies owing more money than it costs to actually bury them, meaning that the average renter actually dies broke because they actually owe more money than they had at the time of their death. But again, this isn't about you buying a home. If I were buying a home right now, I would try to find a home that has some opportunity to add value to it. Maybe it's a home that needs some cosmetic work. Maybe it's a home where you can add an ADU in the backyard to increase value. Maybe it's a home that's been sitting on the market for an extended period of time and now is just getting overlooked because of how long it's been sitting there. Either way, I would focus on trying to create opportunities in this market. Now, renting is buying patience. That's what Dave Ramsey says, and I strongly agree with it. So if you're a renter at the moment or plan on being a renter and you're waiting for opportunities out there, start focusing on the things that you can control that will make you a better homeowner. Things like working on your credit score, working on creating a budget that will add some additional money to your down payment to give you a better opportunity. And in addition to that, focus on education, learning as much as you can about the process so that when you're ready to buy a home, you're a knowledgeable buyer. You know exactly what you want, how to do the process, and not necessarily having to follow someone else's lead through it. Now, if you're one of those people trying to become more educated, I created a first-time home buyer course, which is linked below, to guide you through that process from A to Z. So if you're somebody that wants to become educated on the process, but you're not sure you're quite ready, do me a favor and check that video out. So I started the video by asking the question, should you buy now or should you rent? I think for most people right now, the better option is probably renting because of how much housing costs are and how low affordability is. I would focus on the things that I just mentioned in the video to make me a better home buyer when the opportunity presents itself. But at the same time, there are opportunities out there in the market if you are a home buyer, and that's what I would focus on if I were somebody looking to purchase a home right now. And for everyone else complaining about high mortgage rates, high prices, and nothing improving, just always remember, focus on what you can control because things can always be worse.